Gold prices steadied on Wednesday, trading at what were new all-time records just 6 weeks ago, as US stock markets kept lagging global equities, and the dollar fell again amid fears that global capital will dump US assets, including Treasury bonds, thanks to President Trump's revenge tax on foreign investors. Buried in Trump's one big beautiful tax and spending bill, now lambasted as a disgusting abomination by key Trump supporter and former government efficiency czar, billionaire tech CEO Elon Musk, Clause 899 would enable Washington to levy a charge of 5% to 20% on U.S. profits and income made by investors based in countries accused of hitting U.S. companies with discriminatory taxes. Now, being rushed through the Senate for approval before July 4th, Trump's revenge tax could see the dollar dive 5%, reckons German multinational financial services Giant Alliance's chief investment officer, Ludovic Subran. The dollar today traded near a 2-year low on Bloomberg's index of developed and emerging market currencies. The gold price was meantime trading at $3,350 per troy ounce, down 1.1% from Monday evening's 4-week high and $150 off mid-April's record peak. New York stock markets opened the day 0.3% higher, while Asia closed with a 0.6% gain and European bourses traded 0.5% higher, extending the outperformance of non-US equities worldwide to more than 12 percentage points in 2025 to date. Gold has done more than twice as well, however. New data today said the US economy added only 37,000 jobs in May, the weakest growth since March 2023, and more than 2/3 below Wall Street forecasts for the ADP payrolls estimate. Friday will bring the Bureau of Labor Statistics' official non-farm payrolls number, a key point of trading volatility in gold and US dollar assets. ADP number out, tweeted Trump on the Truth Social platform he owns. Too late, Powell must now lower the rate. He is unbelievable. Europe has lowered 9 times, the president went on, renewing the White House's attack on the Federal Reserve chairman he himself appointed in 2019. 2 of Trump's 3 policy aims have now been achieved, says a note from gold market strategist Nikki Shields at Swiss Bullion Refining and finance group MKS PAMP, with lower rates, the last shoe to drop, as the dollar weakens and energy prices fall. The European Central Bank will cut Eurozone interest rates yet again this Thursday, consensus forecasts say, after consumer price inflation across the 20-nation currency union slowed to 1.9% per year in May, 1 tick beneath expectations. U.S. economic growth will slow by 2/5 in 2025 to 1.6%, says Paris-based think tank and policy forum the OECD in its latest updates. But current data say GDP growth is running at 4.6% annualized in the April to June quarter, according to the Atlanta Fed's GDP Now estimates. Because of tariffs, our economy is booming, tweeted Trump earlier today, just before the monthly ISM survey of services businesses said the sector suffered falling activity and orders in May, but with prices paid rising sharply. That slowdown saw the price of U.S. Treasury bonds rally from yesterday's 1-week low, edging the federal government's 10-year borrowings costs down below 4.40% per annum for the first time in almost a month. America is becoming less attractive to global investors at a time when the government's dire and deteriorating fiscal position needs them more than ever, says Bill Dudley, former president of the New York Fed. If American stocks and bonds are made riskier and more expensive, it behooves foreign investors to take money home, says Bloomberg columnist John Authers. But with the US dollar remaining the world's #1 central bank reserve, business invoicing and financial trading currency, demand for reserve assets leads to significant currency overvaluation with real economic consequences, claimed the Mar-a-Lago plan laid out by wealth manager Stephen Moran, now chairman of Trump's Council of Economic Advisers, rehashing long-standing arguments for weakening the dollar's reserve currency status in his user's guide to Restructuring the Global Trading System, published last November. Central banks as a group continued to buy gold in April, official data says, but at a slower pace for the second month running, as the precious metal raced to a gold peak of $3,500 per ounce. Gold's rally to multiple record highs is unlikely to deter central banks from buying, says senior analyst Krishan Gopal at the Mining Industry's World Gold Council, because they tend to be more strategic in nature. But it could explain some of the deceleration. Despite the slowdown in purchases, say commodities strategists Warren Patterson and Ewa Manthi at Dutch bank ING, central banks are likely to continue to add gold to their reserves, given the uncertain economic environment and the efforts to diversify away from the US dollar. Please like this video and subscribe to our channel.